big week, as we said. So earnings kicking off with the banks. United Health later in the week as well. Econ data, CPI, PPI. We got the Fed minutes. We got retail. Leisman today saying that the jobs report means the Fed's likely to hike in May. Feel like the market doesn't really know what to make of any of this just yet.
No, the market right now is very conflicted and very confused. Retail sales, that is a big report. That's a big report because I think that will identify whether or not the consumer is finally becoming cost conscious, finally pulling back in an environment where I think they should be pulling back. And I think if you look at last week's jobs report, I don't think there's any validation, Scott, in that report for what the Federal Reserve is going to do. You're talking about information that was not available after Silicon Valley Bank, right? So the data input only goes to the Friday before Silicon Valley Bank. There's no validation in that. But look, I've said this over and over again. You now have credit tightening. That is an added albatross on the consumer. And I think looking forward, the only thing you could expect is a consumer that's going to pull back.
Okay, if you want some information, Weiss, that perhaps the Fed is going to look at and, it won't be skewed at all by what Joe is talking about, the jobs data related to SVB. New York Fed inflation expectations, 1 year expectations up 0.5% to 4.7%, up for the first time since October of 22. 3-year expectations are up 0.1% to 2.8%. So that tells you 3-year expectations, you're still not getting down to 2% inflation. The Fed is going to look at that perhaps and say, well, want more evidence that we need to continue to hike interest rates? Here's certainly one important metric that we look at.
Yeah, I agree with that. And wage growth continues to defy expectations. That was higher than consensus as well in the report on Friday. And take a look. The market didn't have a knee-jerk reaction. It thought about it over the weekend, a long weekend, and here's where we are today. So, look, the other data that was important is loan data, right? We saw that that you've seen loan growth slow down dramatically, the lowest that it's been since the Fed started keeping numbers. So you've got that tightening, and that's the question. Does the Fed consider that? How much do they consider what happened with the banks? How much credit is tightening in deciding whether they're going to
They consider all of it. They put it all into the thing, and they stir it up. It's a matter of what they serve. I mean, what's the end result of everything in total?
So the end result of everything in total is that the economy is getting hit with a sledgehammer. It's going to continue to slow. I think we'll see a weak, retail sales number on Friday. I agree with you. It's an important number. If we don't on this Friday, then we'll see it again when they report again. So it's clearly happening. This is a very predictable playbook in terms of when Fed tightening hits the economy, and that is starting now.
So, Kerry, Wolf Research has some interesting commentary out today. The Fed's actions to both tighten and loosen policy at the same time are very likely to keep inflation elevated, prolong the upcoming downturn, and cause equity markets to be volatile while significantly underperforming over the remainder of the year. What do you make of what they say, and sort of what's at stake this week in what is undoubtedly a big week?
Sure. Well, Scott, we're going to find out on Wednesday something about inflation. And that's a number that the Fed is going to look at carefully. We expect that rents will come down significantly. That should play a part in the overall number and what the Fed is going to do. So it's the language that Jay Powell uses when he speaks that people pay most attention to. If he says we're raising 25 basis points and we think that we need to go longer and harder and we're being aggressive because inflation isn't coming down, that's very different than if he says 25 basis points and we're seeing reaction in the banking world and lending and inflation that's moving in the right direction. So the market right now is, it's kind of holding in a pattern that suggests we've got earnings coming up. We don't know what's going to happen with these macro numbers. But remember, the market is over 4,100. It's not retested the lows. We've stayed much higher than I think a lot of strategists expected, particularly given what happened with the banking industry last month. If we can hold in at this level over the next 3 or 4 weeks as earnings come out, that would be a win for investors. But we're going to find that out soon.
We know, Joe, we're in an earnings recession, right? Pisani, sent around some interesting numbers earlier.